Hi and welcome back guys to TCM Education. In this ninth video of our series Green Days Library, we're gonna examine and analyze another short play. This time the company that we're gonna analyze is ALB. The stock is not a stock that's normally on our watch list. It's in the business of energy storage. And if you're going to look on your charts on the 5-year chart, you'll see that this business is not doing very well. So, but this is none of our problems. We want to analyze the stock. It ended up the trading day, as you can see, down 4.6%. And this is as much as it went. I mean, if you look at the chart, this is actually amazing to watch. Take a look at the lows of the day in the first 20 minutes, then retested, and then the stock closes at the lows of the day at the same level, 56.60, give or take. So this is amazing to watch. So basically for for almost 6 hours, the stock trends lower but never breaks the lows of the day. Okay, so that doesn't happen very often. So what can we say about this stock? Let me add as always the view up. Maybe we can draw some attention to it from it. No, I don't see. Anyway, so the stock gaps down basically starts with in the first minutes with a huge move down. So basically almost like gapping, but we didn't have clue about it in the pre-market. It still gets on some traders watch list after dropping from above 59 to the lows of the day 56, 50 or 60. And the question is, how do you take advantage of that? Okay, so a sharp move lower, and then we establish the lows in the first half an hour. Then hold on a second. Okay, that's the lows. 56, round things up, 65. Okay, then the stock moves higher and creates here, and you know that this is already the number already is a round number. So let's draw the line. So the stock consolidates above 59. Sorry, it's 58. Sorry. Above 58, the view up is above, and we have a clear consolidation at 58.30. That's the trade basically, guys. So if you're looking for a long play, if you're looking for a short play, I mean, if you look at the daily chart, you see a very weak stock. If you look at the intraday chart, it's down, reversed from the lows. The target should be trivial. It's not like the stock is showing anything perfect to the upside. Actually, it's basing at 58, and it's giving us a 30-cent stop loss, which is way below our 50 cents, in this case 1% threshold for risk. And again, the chart is telling us the story. This is the stop loss. Hold on a second. It will be coming in our watch list. $58.28, and the stop loss and the entry is here at 58, or a couple of cents below. So basically we have this 30 to 35 cents of risk. We always add a couple of cents just to be on the safe side, just because of slippage. So let's say 40 cents of risk out of 55 to 60. That's the 1%. That's roughly 2/3 of 1%, so it's definitely within our threshold of risk. And again, for those who are not familiar 100% with the system is very simple. You take a 1% risk. It doesn't matter if your position is a $10,000 position or $20,000 position. We don't care how big the share price is. It can be a $20 share price or a $40 or $100 share price, the position is the same positions. You just buy, or in this case short, less stocks. So if the position is on, let's say, to round things up, $60, this is a $300 position worth $20,000. So the risk will be, in this case, 1% will be $600. Sorry, $200. Two-thirds of that will be $140. That's pretty much the risk. So on 300 shares, the risk is in this case 30 cents. Actually, it's less than that. It's $100. Okay, I thought I said $140. I think it's less than that. Anyway, those who don't have a platform where can you easily convert shares to dollars, meaning a position, you need to practice with your iPhone how to divide the $20,000, and I will do it right now with you. Let's say the position is $20,000, so I'm dividing 20,000. Hold on a second. 20,000 by 58 equals 350 shares. So it says 344. I'm going to round things up to 350. That's it, 350 with a stop loss of, in this case, 40 cents. It's not going to be 1%, which is in this case $200. It's going to be a little bit less, but let's take into account some slippage, commissions for those who pay commissions. So all along the whole bundle reaches less than 1%. That's our strategy. So worst case scenario is already built in. You're losing $200 on this trade. And again, if you don't feel comfortable with $200, lower your position to $10,000. So in this case, 175 shares, and you're risking only $100 per position. And if you're comfortable with 20, maybe you raise it to 30, and so on and so forth. It doesn't matter. Now the liquidity here is perfect. That's why we are looking at stocks that trade at least 5 million shares. Okay, we can look at stocks that trade 3 million shares, and they will fit this strategy perfectly. We're just going to want to be, you know, overzealous about the liquidity, the volumes. We don't want to deal with spreads, although in this analysis, of course, I don't know how big the spreads are in ALB. I would have to say anywhere between 3 and 10 cents, worst case scenario. That's my guess watching the stock trade in the past. And again, the entry is clear, 58. You can do it with a limit order, you can do it with a market order. Basically, I'm not suggesting anything other than an entry at 58. Okay, so 1 or 2 cents below won't make a difference for our risk management here. Okay, so the stock drops to the lows of the day. Then guess what? It's coming back almost to the entry, and then goes back to the lows of the day again. So what can you do? And again, it depends on your strategy. If the strategy is wait until the end of the day, and basically it's now 11:30. Okay, the stock reaches the lows of the day, which is you know. Oh wow, why is it? Why won't it move? Hold on a second, guys. We have a design crisis here. Okay, for some reason I cannot do it, but okay, here it is. Okay, sorry it's not working, but let me try again. Just shame to lose so much time on this BS issue. Just to show the price at the lows of the day. Okay, so it's really a problem. Okay, here it is. So 56.70, the lows of the day, or 68, whatever it is. And this level will be tested again in the very late session at the close. So what can you do? So the stock went down $1.30. Are you about to take profits out of this trade? I have to say, in this case, the stock is, you risked on this trade 30 to 40 cents. The stock is up $1.30. Two options here: stay at the entry because this trade is not going to lose money anymore, or just push the stop loss down $1, and you profit here nicely at 3 to 1, and you're giving up basically on the continuation play. The other option is to wait, and then the result will be the same by 4 p.m., which is crazy, because why won't this stock continue lower under 56.68? I don't know why. It just didn't break the lows. It's so anyway you look at it, anyway you manage it, either you move the stop loss to the entry or you take the big chunk, eventually it works. But that's a pure luck. I would have to say that on such a stock, that when it goes down so fast, you lock profits, and worst case scenario you end up with a winner of $1 instead of $1.30. The other option is to wait at the entry, and by 4 p.m. The stock reaches here the lows of the day again at 56.65. Now, are there additional entry points? I have to say, if there is an additional entry point, it may be again here at the VWAP level, using in this case the round number as stop loss. So if we're looking at the VWAP level, that's 57.70 ballpark, and the 58 will be the stop loss. So again, a 25 to 30 cents risk on this consolidation, which takes place over 15 minutes. So if you're not paying close attention to Albemarle, you're missing this trade. And after that, I don't know if there is additional great entry points. Maybe this 57.20 entry. I mean, I'm just guessing now, or trying to force trades. Okay, maybe there's one here at 57.50. I have to say that the clear trade and the best one is this one. Under 58, clear risk, a bear flag formation, a very weak stock on the daily, a very weak stock on the intraday. Too bad it doesn't, this trade is not turning into a huge winner, but it's still a 3 to 1 winner in a day where the market didn't do much. Like I said, the SPY closed down 0.22, the Nasdaq 0.5%, the Dow Jones actually closed positive. So can you expect more from this stock, which is a real loser on the daily chart? Yes. It didn't happen this time. So that's my inputs. Those are my inputs on this stock. As you can see, it's so tough to answer all the trading scenarios, and this one is a bit disappointing because the potential was so great, the entry so clear, the result, the first move amazing, but then you needed to wait 4 hours for the final outcome. Okay guys, thanks a lot for being here again with this video. We'll love if you like it, and more than that, share it with your day trading friends, and we'll see you in our next video. Thank you for being here.